Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Chevron. And let me tell you, it's not just about gas prices and oil rigs. We're going to see if their profits are as slick as their commercials make them out to be, or if there's trouble brewing beneath the surface. This report is from May 2025, so it's a snapshot of how Chevron was doing back then. It's called a Form 8K, which companies file to announce big news to investors. In this case, it's about their earnings, basically how much money they made for the first 3 months of 2025. The headline is that Chevron made $3.5 billion in the first quarter of 2025. That sounds like a lot, and it is. But to really understand if that's good or bad, we need to dig a little deeper. Was it more or less than they made last year? What's going on in the oil and gas market that might have affected their profits? This report by itself does not tell us if the 3.5 billion is a good or bad number. Only comparing with previous years or competitors would give us some context. The report ends with a signature from Alana K. Knowles, who was a vice president and controller at Chevron. Her signature confirms that the information in the report is accurate to the best of her knowledge. It's a standard part of these filings, but it's important because it holds the company accountable for what they're saying. Extemdan, what does all this mean? Chevron is a huge company and its performance is a reflection of the global energy market. In 2025, $3.5 companies were doing. If those earnings were lower than expected, that could signal problems with production, lower oil prices, or increased costs. Looking at the broader picture, Chevron has been navigating a changing energy landscape. There's pressure to move towards renewable energy sources, but oil and gas are still a huge part of the global economy. The company has to balance meeting current energy needs with investing in the future. This transition is expensive and it introduces a lot of uncertainty. We can't tell this from this report though. The potential risk for Chevron and other companies like it is always the price of oil. If oil prices fall, Chevron's profits will likely fall too. Also, changes in government regulations, especially related to environmental issues, could increase their costs or limit their operations. In conclusion, this report tells us that Chevron had a profitable first quarter in 2025. But to really understand what that means, we'd need to compare it to other periods, competitors' performance, and the broader trends in the energy market. The company faces both opportunities and risks as it navigates a changing world. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate deep dives.